Just looking at central bankers around the globe meeting in Switzerland on Wednesday and Thursday, and of course discussions will be around regulation, capital requirements on the banking front. Can you give us your opinion of what you expect to unfold?
Well, I think that the talks that have been had is that they are looking at banks holding more capital, and they are looking at liquidity rate, ensuring that banks are actually more liquid. Now, we are quite clear that our banking sector, we are pretty well capitalized anyway. We're well beyond the Basel II requirements. We do have a problem with liquidity in our country, in the sense that certainly it's our view in the banking sector that the structure of the financial sector in this country needs to be looked at, because most of the retail deposits are actually sucked up by the money market funds.
So do you think we're going to see a separation of those assets, or let's put it this way, would you like to see a separation of the deposits versus the investment banking?
Between banks and other sectors of the financial industry, in that money market funds and others should also be appropriately regulated. And we would want to see an environment where banks are more incentivized to actually take in retail deposits, and even when those aggregated deposits are put into the banking sector, they are actually put in for longer periods of time, so that we actually get long-term liquidity, which we don't have at this point in time.
Just coming back to those capital requirements, Kaz, we've discussed this before, and the one-size-fits-all story that you don't feel is appropriate for emerging markets, if we look at emerging markets and developed world in totality. Do you think that we will see onerous capital requirements pushed into emerging markets as a result of the need in the developed world?
No, I think that there will be a fair degree of national discretion in how we implement whatever recommendations come out of Basel and G20. I think that there is a lot of pushback from emerging countries that while we accept the need for regulation, while we recognize some of the failings of the financial sector, in particular the developed world, that we need significant national discretion in how we apply it, and the application of those recommendations must be informed by the broader macroeconomic conditions, the challenges that emerging nations face, and by the fact that in a country like South Africa, we have actually withstood the first phase of the financial crisis pretty well.
Kaz, thank you very much for your time. Kaz Cavadia, the Managing Director of the Banking Association of South Africa. Still in the studio, Greg Katzenellenbogen, Sanlam Private Investments. Let's talk resources. We've spoken about the banks and the rally that we're seeing on that front today, but resources also rallying, and that's after, again, volatility. Yesterday, we saw Anglo-American, BHP Billiton both down to the tune of 1 1/3%, and both stocks today in positive territory. Anglo-American reversing all of yesterday's losses, up 1.5%. I know that you have given me your view on Anglos. You do like the stocks at these levels. Going forward, is it still a buying opportunity?
I think so. In the short term, you would have seen Anglo Platinum's trading update, and that's always very positive for Anglo when it's good. And I think at these levels, 280 rands, Anglo still represents a buying opportunity.
MTN. Everyone's favorite stock. How are you feeling about MTN at the moment?
Well, I think MTN, it's, the concerns are they ex-growth or not? They generate a huge amount of cash. They've been trying to do a deal for some time that hasn't materialized. But I do think that MTN is a quality stock, and it's got some pretty good offshore assets, and that at these levels it represents good value.
Aspen has recently revised downwards its target or its offer to Sigma in Australia, and that Sigma makes up about 25% of the generic drug market in Australia. The stock was under pressure after that revision, and Sigma's come out and said that they're actually not going to accept the offer, but they will work with Aspen to a revised proposal. Is this one off the table, do you think, in other words?
Well, I don't think so, but Aspen obviously don't want to pay up for, they've done their due diligence and they think that the revised offer that they've put in is the right offer. But of course, at some stage it depends, they, as you said, they're 25% of the generics market, and it's, it might be worth Aspen's while to certainly not to walk away at this stage, but to investigate whether they can certainly find a way of paying the price asked.
We're up 2% on Aspen today. Is it a stock that you would put into your portfolio? Do you have exposure to the pharmaceuticals?
Yes, we do. I think Aspen is a good quality stock, and of course it's outperforming. It's been outperforming for some time, and so it's got a lot of momentum behind it.
Greg, in terms of structuring your portfolio asset allocation-wise, at the moment, what equity exposure do you have versus bond versus cash?
Well, essentially, at the moment, we're looking, if you're talking at the house view portfolio, looking at about 75% exposure to equities, a lower cash weighting. But at the moment, we have a very low allocation to bonds.
What would trigger a higher bond allocation, in your opinion?
Well, I think in the short term there's a lot of talk. The markets are telling, if you look at some of the retailers, that we might very well get another interest rate cut when the Reserve Bank meets on the 22nd. If that doesn't come through, then of course those stocks will reverse. But I think that it's possible that if this could be the last interest rate decrease for a while, and thereafter interest rates would start rising. So we wouldn't be looking to be in bonds anytime soon. Bear in mind that we're a house that certainly as equities remains our main focus.